Hey everyone, welcome back to Corporate Decoder. Today, T. Rowe Price International Funds Incorporated just filed their semi-annual shareholder report for the Emerging Europe Fund, and I am seeing some interesting shifts in their holdings that we need to break down. Quick note, this is not financial advice, just my take on public filings for educational purposes. The fund is showing a big play into a specific sector, and the top holdings reveal a concentrated bet on a few key companies. Alright, let's dive into what this report tells us about the Emerging Europe Fund. This is essentially a snapshot of how the fund was doing and what it was invested in as of the 30th of April 2026. It covers the 6 months from the 1st of November 2025 to that April date. First off, let's look at the big picture. The fund's total net assets are $69,837,000. That means all the investments within the fund, minus any liabilities, add up to just under $70 million. It is a solid chunk of change, but it is interesting to see how it is deployed. Now, something that often tells us about how active a fund manager is the portfolio turnover rate. For this period, it is 13.3%. This generally means the fund buys and sells fewer holdings over the year. Compared to a more actively trading fund, a lower turnover rate can suggest a more long-term investment strategy. This is where things get really interesting. The biggest chunk of the fund's investments, a massive 61.2%, is in the financial sector. This is a huge concentration and tells us the fund manager is really bullish on financial companies in emerging European markets. Then you have industrials and business services at 13.0%, followed by information technology at 7.6%. Consumer staples and consumer discretionary are smaller pieces at 5.2% and 3.2% respectively. All the other sectors like communication services, healthcare, energy, and real estate make up smaller percentages. The other category is at 2.2%, so it is very clear the focus is heavily on financial services. Looking at the exact companies that make up these investments, we see a pattern. The number one holding by a significant margin is OTP Bank, making up 16.8% of the fund's net assets. This is a huge bet on a single company. Following that, we have the National Bank of Greece at 11.1%, the Nebius Group at 7.5%, Eurobank at 6.1%, and Halyk Savings Bank of Kazakhstan at 5.7%. These top 5 holdings alone make up over half of the fund's total assets. The rest of the top 10 includes BIM Birlesik Magazalar at 4.7%, Georgia Capital at 4.4%. Pauczek Nakasa Osadnosi Bank Polski at 4.2%, Pauczek Zaklad Ubezpieczeń at 3.6%, and Hasi Omasabansi Holding at 3.2%. This is a very concentrated portfolio, meaning the fund's performance is going to be heavily influenced by the performance of these few key companies, especially OTP Bank and the National Bank of Greece. Let's look at some of the financial highlights for the different share classes. For the investor class shares, the net asset value per share was $8.63 at the end of April 2026, up from $6.54 at the beginning of the 6-month period. That is a nice jump reflecting positive investment activity. The total return for the investor class over these 6 months was a very strong 35.50%. This is quite impressive. The net expenses after waivers, which is what an investor actually pays, came in at 1.41%. For the I-class shares, the net asset value per share was $8.56. Their total return was even a hair better at 35.72% for the same period. The net expenses for the I-class were lower at 1.08%. This makes sense as I-class shares typically have lower fees. The Z-class shares saw a net asset value of $8.52. Their total return was also strong at 36.44%. What is remarkable here is the net expenses for the Z-class were effectively zero. At 0.00%, this class is often for institutional investors or specific funds, and the lack of expenses is a huge benefit. It is worth noting that the total return for all classes over the last 6 months was very high, ranging from around 35 to 36%. This indicates a very profitable period for the fund. Now, let's get into the actual holdings, which we touched on with the top 10, but this section gives us more detail. We see the classification by country. Greece represents 22.4% of the portfolio, mostly in common stocks. Hungary is at 20.0%, and Turkey is at a significant 21.5%. Poland comes in at 13.5%. Kazakhstan and the Netherlands are also present. Looking at Turkey in more detail, you see companies like Akbank, BIM Birlesik Magazalar, and Hasi Omasabansi Holding. These financial and holding companies are clearly playing a big role in the fund's strategy. Interestingly, Russia is listed with 0.0% given the geopolitical situation. It is not surprising to see that any Russian holdings have either been divested or are now valued at zero. The report mentions the impact of sanctions and the war in Ukraine. noting that Russian securities became largely uninvestable for foreign investors. It is a stark reminder of how political events can directly impact investment portfolios. The fund also holds a small portion, 1.5%, in short-term investments, specifically in a T. Rowe Price Government Reserve Fund. This is likely for liquidity or to manage cash flow. There is also a small amount, 0.6%, in securities lending collateral, which is a way for the fund to earn a little extra income from its holdings. Looking at the statement of assets and liabilities, the total net assets are, as we saw, $69,837,000. The investments in securities make up the vast majority of the assets. On the liability side, there are obligations for securities lending collateral, payables for shares redeemed, and investment management fees payable, among other smaller items. The statement of operations gives us a look at income and expenses. For the 6 months ended the 30th of April, 2026, the fund had dividend income of $821,000 and income from securities lending of $6,000. Total income was $827,000. Expenses were also detailed. Investment management fees were $328,000. Other expenses like shareholder servicing, custody, and registration fees added up. Notably, there is a line for waived per Pascal ID by Price Associates at a negative $302,000. This indicates that the fund management company T. Rowe Price is subsidizing some of the expenses to keep costs down for investors, particularly for the investor and iShare classes. The most significant part of the operations section is the realized and unrealized gain or loss. The fund saw a net realized gain of $4,380,000 from securities. Even more impressive is the change in net unrealized gain, which was a positive $14,147,000. Combined, this resulted in a net realized and unrealized gain of $18,527,000. This is what drove the strong total returns we saw earlier. The statement of changes in net assets shows how the fund's total assets grew. The increase in net assets from operations was $18,962,000 for the 6-month period. Distributions to shareholders were $1,594,000. The fund also saw some capital share transactions, with more shares sold and reinvestments being offset by some redemptions, leading to a net decrease in net assets from capital share transactions of $2,093,000. Overall, for the period, the net assets increased by $15,275,000. The report also includes details about the approval of the investment management and sub-advisory agreements. This section basically confirms that the fund's board reviewed the services provided by T. Rowe Price Associates and found them to be satisfactory, approving the continuation of these contracts. They looked at performance, fees, and economies of scale, concluding that the arrangements are in the best interests of the shareholders. For example, they noted comparisons to industry peers regarding management fees. For the investor class, actual management fees ranked in the first quintile, meaning they were among the lowest, while total expenses ranked in the 5th quintile, indicating higher total costs in that peer group. This suggests they are managing the direct fees well, but other operational costs contribute to the overall expense ratio. So, what is the story here? The Emerging Europe Fund is making a very strong, concentrated bet on the financial sector in emerging European markets, with a particular focus on a few key banks. The fund experienced a really strong performance period, with significant unrealized gains driving its total return. The fund management is actively waiving or paying some expenses to keep costs down, especially for different share classes. And the board has reaffirmed its confidence in T. Rowe Price's management. The major risk is the high concentration in a few stocks and the inherent volatility of emerging markets, especially with ongoing geopolitical uncertainty in the region. The biggest concern I have is the heavy reliance on just a few financial institutions. If OTP Bank or the National Bank of Greece stumble, it will have a disproportionately large impact on the entire fund. The strong recent performance is great, but investors need to be aware of the risks tied to this focused strategy. Alright, that is my take. Stay decoded. If you found this video helpful, please like, subscribe, and join our community discussion in the Discord linked below.